clients will now choose the area they want to focus. So it's better we lay a good foundation for you guys before you go into trading. So we'll call futures on crude oil futures and the derivative, we'll call it energy without borders. So we're going to give you some deep introduction into what you have been doing already, how we did it from the beginning to lay a strong foundation for you to become an oil trader. Some of the things I'm going to discuss here, we have discussed them, but it's just our models of operation to make sure all the students are carried along stage by stage. So the objective of the class will be to explain to you properly how derivative investment works and also the nature of derivative investment. Then how oil futures, check very well. Here now is futures, no more derivative. How oil futures and derivative is traded, that's the objective. Of course, you have already been known to profit and risk. Then and how you can get started. Some of us have already started. So we're gonna interact on these two, number one and number two, properly. Then I'm going in here. So let me also ask a question. I'm sure some of you are closer with your friends and loved ones. When you discuss about trading, what do you usually hear from people around you? Did they ask you to go ahead or ask you to run away?
From my own angle, based on my past experience, I've just kept it to myself because people are not saying good thing about it.
They say bad thing about it, right?
And some people feel it's a scam.
I will even say most people feel it's a scam. Most people, not some.
Most people, from my own end, most people are not interested. One, they say they don't have the strength to do it. And secondly, most people don't see it as a work. They don't see it as an investment. If you tell someone, they will tell that you are not doing the work, that you are just being lazy around the place. That's from my own end. I decided to keep it to myself.
Okay. One could be, one of the option could be true, but not exactly true. Like, although they say lazy, but trading is like a passive career, not an active career.
My
You know what I mean?
On my own side, most people have tried and failed. So when you try to talk about it, it's as if what you are doing, you just want to lose money. You don't want to do anything with the money. So I don't talk about it anymore. I just keep it onto myself until I start getting results.
Oh, I see. Can I hear from one person again?
I've had a bad experience in trading. I think that was in 2021 after school. So all the money I saved after my internship, I took everything and I put into Forex. But I didn't have the knowledge of Forex then. It was someone that convinced me about the robot thing. So we invested in a robot and then they installed the robot in our phone and then we were trading the robot. So on that day, particular day, June 18th to 2021, everything went down. I think I lost about $12,000 then. So after that, After that, I ran away from Forex. I didn't want to work for anybody before because I was trading Forex. I was making profits. So, but then I had to start applying to work in the UK. Then I left Nigeria the following year. And then this year, I just looked at it. Flemsy Machiavelli, one of my friends in the US. So he started trading and then I picked it up again. And then I started looking at it. I said, okay, I have to go back to it. But this time around, I need to get a proper foundation of it to do.
I see. There's a course we will do concerning brokerage type. I had to pick brokerage. So we don't regularly do that course, but I think we should do that course. But because client does not really pay attention to all these things, they only pay attention on deposit and withdrawal. Once the broker is paying the deposit and the withdrawal, they say it's fine. But some of these things some of the losses we experience in trading could be the nature of brokers that is being used in trading. Then, so you could see that some of us now have similar experiences in terms of mostly negative. Now, it boils down to the whole narrative of life that not everybody will succeed in business. So it falls down to number 3 of our objective, profit and the risk. profit and risk. Nothing is easy, especially when it comes to finance. It's not as easy as it is. If more people are making money, it means that 70% of people who are into trading will be millionaires, and which is not really possible like that, because the market has a lot of complex factors that can affect it. So for you to be successful in trading, you need to start from being at least top 30% of people that are doing well, to top 20, to top 10, to top 5. You know that when you go to top 20, top 5, top 10 to top 5, you know that you're already like a big boy. Probably you are like a bank or an institution. It could be a private institution, but you're doing well in trading. That's the deeper you have gone. It's like that in every business. So we're going to discuss a little bit about the risk involved in trading. You may also have heard about it, but in a different dimension, because this is a proper teaching. Then on this slide now, we will now go on proper definition to define derivative investment. This meeting is recorded because it's an official recording. So how does it work? And now we are coming on this 5 major definition. You need to take note of it because it's very important. The derivative is part of financial instrument or a financial contract that is set between 2 or more parties. And one important thing you need to take note of it is that when we say derivative, it means that the product we are trading is not like cryptocurrency. The product we are trading on derivative is not like cryptocurrency. It's actually a product that is being derived from something somewhere. The price is derived from something somewhere, which crude oil is part of the product we trade, which has a physical presence somewhere, and its value is what we are trading. So basically, we are trading on commodity stock. Do you understand? So basically, when we trade on derivative, we are trading on the stock of commodity instead of trading on the stocks of companies. And these are one of the difference between stocks, like regular stock of company and actual derivative stock of commodities. At times, stock of companies are not real. They are not tangible. They are actually NID figures. And the stock market, they are NID figures of growth of a company. You cannot go anywhere and see it physically. You are investing on the value of the company. And that value is man-made. Man set it. Sure, of course, the price of derivative is price of agricultural commodity derivative is also set by human being. But there could be a physical connectivity between a physical product and the price. That is derivative. Of course, it is not traded on exchange, which we already know. And again, some derivative is also a particular instrument, and is also traded as a future contract, forward contract, option, swap. I got this note since 2013, 2023 through Investopedia. So now, I will give you guys more tasks. Apart from this class, go and make a research on swap, option, and forward contract, how it works. Yes, the platform we have available may not give you swap, option, and forward contract type, because it's not a future, it's not an exchange traded platform. I'm talking about MT4 and MT5. It's mostly for derivative instrument and leverage instrument. But this class also, or this course also entitled you to know much about forward contract, option contract, and swap, because you may most likely one day find yourself on exchange just like me. So you can be able to understand how it works. In fact, my story is funny. The day I find myself on exchange, I find myself to come and teach those who are already there how to do it. I mean, who already traded the investment dealers, dealing firm members of exchange. I was the one teaching them how to do it. Full license, regulated, they have the money. Why me? I'm not licensed, I'm not regulated, I don't have the money. I came to teach those who already have been in the market for a long time about future contract, swap contract, options. Do you understand? So now this type of thing is part of the things or another form of investment which you can make on oil, not just on leverage, where you can be where you may lose more than your investment capital, but on some of this other form of trading, you may not lose your investment capital because you're not borrowing more money. So Now, let me just give you a summary that a virtual asset, or I will say virtually every aspect of digital economy is now derivative. You know that these days, anything we're talking about now, we are just talking about it on ID form. But at the end of the day, we are all going to trade everything online. Now, crude oil is part of this derivative market we are trading. For us in the market, apart from gold, crude oil is the best commodity to trade in the commodity market. And also in the entire financial market, crude oil is also the best. Do you know the reason? You should know the reason, Felix, because you've been here for almost like a year now. You should be a senior prophet in this class.
Okay, you're asking me the reason why crude oil is easier.
It's the best, or one of the best instruments to trade in the financial market.
Well, I think he has more information to assist the trade, both fundamental, technical, and all that.
Okay. So to save our time, the way it's the best is because the price of crude oil affects the price of every other asset, including the currency we are trading, the gold we are trading, the stock. Because oil is the major source of energy. So that is the major thing. So the price affects, you know that the whole world is leveraging on oil for a lot of economic activities. So the price affects every other market classes. Now, so going further, that's why if you are an oil trader, it will be better for you to trade to do well. Now there are major factors we need to take into our consideration about oil if you want to be an oil trader. Now, if you come to our forex trading class, we'll give you more than 10 factors on forex. But it could be up to 10. Me, I have about 10. Our second person will have more than 10. But if you want to trade on oil, we focus mostly on these three factors. Mostly on these three factors, which some of you have been in our class before. Emmanuel and Felix, you have been in our class before. We only talk about demand and supply. But another factors we pay attention to is politics. Another one we pay attention with natural disaster. This natural disaster is talking about, for example, Russia and the Ukraine crisis now is part of natural disaster. The political tension in the Middle East is part of natural disaster. Another natural disaster that is like natural, that's not necessarily man-made. The politics on oil, we focus more on OPEC decisions and other factors, but mostly OPEC, what they play into it. But now, take note about the price of oil, about oil and politics of oil. The price of crude oil is fixed or is regulated. That is why it's easier for trading. The price is regulated, meaning that there's already a certain measure price that the countries who has oil fix as a benchmark. The OPEC community also have a particular price they want oil price to remain, that they consider the good price. They also have a particular price they don't want oil price to fall into, that could make them consider it as a bad price, because the price of crude oil controls the economy of the world. Now take note, if the price is high, it's good for or if the price is medium or moderate. When I say if it's too much high, it can cause inflation globally. Please just take note. If the price of oil is too much high, it can cause inflation globally, because countries who invest on oil since oil is major source of energy and it's also major source of other factors, also affect other factors like stock market, bond market, because of oil is major source of power and energy across the world. If other countries could not afford oil to use it to boost the economy, and they now buy it at a higher price, it will cause the price of other things they are doing in the different countries to be high. So it will now cause global inflation. So that's why politics plays a very huge role. So as a trader, if you want to be an oil trader, we pay attention to prices and politics. Knowing the best price these people are most likely going to buy, and the best price the OPEC are most likely going to set it. And within that makes oil price to be regulated, and it's easier for us to know the exact area this market is most likely going to rise, and the exact area the market is most likely going to fall. Unlike forex, it's not like that. I don't know if I'm making sense.
Yeah, that makes sense. But when you talk about the average price and cap for you to have a balanced economy, what exactly and what price exactly are we looking at between what range to what range for us to determine that the economy will be balanced and there will
I
not
will
be
tell you,
inflation?
we have discussed that before, but you have forgotten. Yeah, Emmanuel, now, so you've been on boot camp where we always give outlook. You see what they are projecting, what OPEC is deciding. But at the end of this presentation, now we go on internet, then you see the average price of every the OPEC plus and OPEC community, what they set up to be benchmark. It's called oil benchmark. I don't know if you must have about that one, Chinedu. Talk about oil benchmark. So even you to Emmanuel, so we check it now. So you could see the benchmark, what they decided. And now we'll now know the current price of oil, whether it is actually traded within the benchmark or below the benchmark. If it's below the benchmark, you know that they will try everything possible to push it back to that benchmark for them to meet the actual budget for the year. Otherwise, those countries may run in deficit. Do you understand?
Yes, sir. Yes, sir. I got it. Thank you.
So once after now, that would be the other things we will do. Please just take it into consideration so that you see how those things are decided. But we have extensively deal on demand and supply. We also go to emphasize on it again. Then natural disaster. These three factors are the major factors that we pay attention to. There are other factors there, but if you study them, at the end of the day, they are all fall into any of these. They are all fall into any of these. So going further, there are other things we need to understand if you want to be an oil trader. Because if you're an oil trader, you can hardly lose money. Now, another thing you need to know, understand is like two major types of oil trading, how people trade the oil. They trade the oil either as a future or on a spot contract. There are I'm supposed to add derivative, the one that we are mostly focused on, but it fall under this future. I will explain it more on future, but you actually need to understand a bit of how it works. Now, I said that oil is traded either on spot contract or future contract, derivative contract. Yes, it may not necessarily make sense to you, but you just have to pay attention to it because you may say, oh, which one is this one? Is it not to click buy and sell and put my SL? But you may not know that you're actually dealing on a contract. Now, but you also need to understand it more because you see the spot market, this spot market controls the one you're trading now. Do you understand? You see this one? See this one? The price control the one you're trading. These people are the one that decide the one you want to trade. So the post contract is like the example is like the parallel market, the black market. That's the example, but it's not that oil is done on black market. I put this note to make it more understandable. It's like where you buy something at a spot and close the deal, then you take your money. But it's actually executed on exchange, the spot. So now when you come to exchange, it's like how many of you trade on Binance, all this crypto exchange?
Yeah, I do.
So you know that when you come to Binance, you see people that want to sell crypto, right? Like P2P.
Yes.
So you will see how much they want to sell. Somebody will say you want to sell about $10,000, but you want to buy $2,000 out of it. Now that one now on oil side, the Binance now represent the exchange. Let's say New York Stock Exchange. and the buyer have enlisted 10,000 barrels of oil for sale. And you now you want to buy 2,000 barrels. That is spot. So as you make the execution, the money will be held with a custodian and that order. But now, because of there are thousands of orders that come in irregularly, like fast, so the price will keep adjusting. As the price keep adjusting on the spot, on the derivative and the CFD, then the price started moving, because that's how the price move first on the spot market before it move on the MT5 chart. But the MT5 chart is not spot, is mostly derivative contract or CFD, contract for difference. Then, okay, I also said it here that future contract is like similar to derivative contract because they are mostly done don't take physical. Then the future contract and derivative is done through exchange or a dealer through a commodity exchange. Now, another way, I don't know if you must have heard about me talking about oil contract of last year. I've not even done the research for this year. Oh my God, I didn't do that. So, last year we had over $50 million contract, 50 million contract, not dollars, 50 million contract open on New York Stock Exchange as of January to May, which was the highest so far for the past 10 years. It was like biggest contract people open on oil. Now that was open through the future type of contract. So they open a contract to buy or sell at a future date, and there will be a delivering date. So once that date expired, that particular contract we close automatically. So any price the market close will determine the profit between the buyer and the seller. I don't know what the platform you trade on, Felix. If you are trading the platform, if you're using the platform of a brokerage, CFD broker, you see that at the end of sometimes in a month, around 20 something, they will send an email that they will do a contract rollover of oil. Most broker don't do a rollover. What most broker does is that once the contract ends, they will close all position. In the next day, they will open it in another contract, in another oil, because on exchange, that contract has already ended. So since some of them are getting their signal from exchange, immediately the exchange close all the contract, the trade going on your own MT5 account will close. Then when the exchange start a new contract on exchange, the trade going on your own, what they will do, they will now reopen it. But the one that have closed, most likely have closed either at loss or on a profit. That's why I told you guys now that you may say that what is my business here, but you may discover that you also deal on the same contract, because some brokers will replicate it. But now system has improved that on exchange now there's a commission or a charge for automatic rollover. So on the exchange, most of the contracts now on different exchange are now on auto rollover. So that's how they are doing it to cover up the difference in price. So if you have a position that is open on the day of the contract expiration, instead of them to close your position, they will charge you and roll it over. Then your broker will still charge you to roll your own over. Before, once it's around 21st of every month, all our position will be closed, whether on profit or loss. Then on 22nd, they will open the contract on exchange has all expired. Then if you go to your brokerage website, you will also see that each of the oil you see there has an expired date. If you go on Bloomberg.com, you also see that. I'll also get to that later. So you see that on Bloomberg, we will also give you an expired time when that contract will expire. Then, but we now have two major type of crude oil. Felix, Chinedu, I think you're one of the newest person here. So we have two types of oil. Chinedu, I'm not sure if your friend never blow his account. It's no more joining the class. Flimsy. Because he was doing well the initial time. When he was telling me about buying Lamborghini, I know that he wants to do something serious on his account, which can end up buying him Lamborghini, or he will go back to trekking. Because if a trader stops coming class, check very well, he has blown his account.
I really don't know. I've been trying to get to him for like 2 days now. Sure. I don't know. Maybe he's busy.
He joined us. See that for the first 4 weeks like that, we are all hitting profit back to back. So one day he was talking about, oh, that Lamborghini want to buy, you can buy it. And I said, this guy have sat down and like has gone and slept on his bed and faced the ceiling. Instead of sleeping, he was calculating. You know, that's when devil used to communicate. That he said that night, he come back from work, now began to look the ceiling. It is saying they meditate. You know, they meditate, in the calculate. That means if this is strategy is working like this analysis is working, that means I will hit this with a big loss size. The devil now began to tell you that why began to tell you that you should make it to regret. Why not use? Why did you use big loss size? It says, see, this is working. That market had just gained only $30. I could have that could have been $3,000 now if I change by that volume. Okay, let me wait for Mr. Uche. Let me wait for Mr. Uche. The next class. The next class. Once you drop analysis, I'm using 10 lot. Yeah, as long as the devil give out the loss, he say MM. And that's when he will sleep. He'll be waiting for the next class. And if he's the first person to join that class, remember now he's waiting for the big volume because, and now that day, that's when the analysis will not work.
Exactly you.
That's how you
like
work. That's when the analysis will not work. But it's been working since so. That they just want to increase that volume, it will not work that day. That's when the market will just come because and the person will not go quiet. So it's always like that. So I don't know whether maybe relationship with the full market, I don't know. It happened to even me too. I will do something the day I just want to take a big risk. That's when the market will not work the way I want it to work. The day I don't want to take the risk, that's why everything will be working well. So now I think he must have done this class then. So we have two major types of crude globally. There are a lot of crude oil facilities or production everywhere, but they're majorly grouped under this Brent or WTI. So, but let me give you an insight because these things you may see them on brokerage platform, but you may not know. So WTI is traded through New York Stock Exchange. And Brent is on ICE, Intercontinental Exchange. Yeah, you say you're in the UK, right?
Yeah.
So ICE, UK is part of the ICE. ICE means Intercontinental Exchange. So Brent crude now, it means we have a UK Brent, which is traded on London Stock Exchange. Yeah, take London Stock Exchange. Or either London Stock Exchange or London Metal Exchange. You know, London UK has many exchange. London Stock Exchange or London Metal Exchange. That's when Brent is traded. It's called UK Brent. There's also Brent in Australia, Brent in Iran, different other exchanges. So they call them intercontinental, on different continents. But WTI is mostly traded on New York Stock Exchange. Most brokers that give you WTI crude price, they are all coming from New York Stock Exchange, and some of them paid a lot of money to get that price, that liquidity price there. That's why some of them will not give you that. You may see US oil. Maybe they give you a different price that looks similar to that price because you're on CFD. So there's a particular price you're paying every month to be getting a price feed from WTI because that is where the signal is coming from. Forget about what you see on the internet, but a lot of brokers, that's where they're getting their signal from. Some of the free prices you see somewhere is also free price that is released through liquidity providers. But now there's no money that's covering them. So you may see them from maybe trading view, but it's actually a price coming from one particular exchange or the other. Now, there are some benefits you need to know when the trade oil, so that the benefit. Why I emphasize on this thing is because if you know them, it helps you to understand what you do digitally. Yeah. So because I know that it's a physical commodity, that's why I look for demand and supply ratio, the figure. Since it is physical, that physical will definitely has impact on the price. It's easy to make profit and gain and predict. And now, how is it easy? Because since I know that it's physical commodity, if I say that there are more quantity of supply or more less quantity, I can predict the price. Okay, this is gonna go up or it's gonna come down. And also, the price is also regulated. So it's easy to know the quantity. of demand and supply, how many quantity available oil in global, which we have discussed before in our previous boot camp. You see how we go to forest started to get those things and blah blah blah. Then the price is regulated. Since the price of a thing is regulated, I can know what are the price government want it to go, or what are the price estimate. Just as a man asks now, what a price as a OPEC looking at for, because they regulate the price so that people will not go and overpump the price, the commodity. No, the price will crash, or if it crash, everybody will lose. They want to stabilize it. That's why the price is regulated. But forest, like, it's not like that. Forest is determined by the strength of the economy of that particular country you're trading the currency with. For the fact that it's a household name does not mean that that is the major cocoa. There are other areas you can make more money that is not like that. Then access to oil can be done through commodity and future exchange. Yeah, but now you can also get it through your CFD broker, depending on the type of investment you want to make on oil. The essence of this class again is also to help you to prepare you ahead of the future, because tomorrow you may not even want to trade on CFD. You may have access to proper exchange where you can be able to deal on market. You already know how it works. Or any day they open such platform for you, you see how they listed all the contracts. You can say, oh, okay, this is how it works. You can really understand how to choose a contract best for you. Then, because you know already some of these things, it becomes easier for you to navigate. Now, these are industry players of oil. I think so many of us fall under here. So many of us fall under individual trader here. For me, I fall under here. I fall under here, broker. I fall under hedge fund. So I'm also trying to seek a career as an investment banker, but I'm not really pushing more on it. So I work with a broker, and I've managed a couple of brokers very well in the past. So I'm also a brokerage consultant. So like those of us that want to become a broker in the future, I can help you get you a very good broker with liquidity. Then, of course, I trade for companies. So I'm a HR manager with at least 2 companies that are doing well. I'm trading for their client. Of course, I'm also an individual. But so some of us fall under here, individual company. Then we also have liquidity providers who plays a big role in the market. Those people are the ones that provide capital you are trading. When you make profits, people that pays you are these guys on a genuine level. It's not even your broker. It's this guy that cover the profit you're making. And then when you lose money, you should lose to these people. So some brokers cheat where you are trading. Instead of them to pass your order straight to liquidity, they can hold your order. They will not pass it across, believing that you will lose. So on that note, that's what we call B book. So it means if you didn't pass that order here and you make profit, broker can pay you. It's not a bad thing, but just that they are taking a high risk. So how you can impact is this. Assuming you're able to make more profit and it didn't pass it across to liquidity, who has the money to pay, the broker may start start behaving funny. They may cheat on you, may tell you stories because they believe that you lose that money, and the end of the day you keep making more profit. So what brokers does is to pass order flow to liquidity. And who are these liquidity? Forest Bank. They are big companies. They have liquidity that is available in trading. Some of them, some of the brokers have what is called aggregated liquidity. It's not just one, multiple liquidity at the same time. So they can be able to switch order from one liquidity to another, so that their client will have enough money. If you like make $1 million, they will go to liquidity and get the money and pay. So that is how it is structured, because a broker is always like a middleman between a buyer and a seller, even in real estate. But sometimes, because of some traders don't know what is going on in the back end, they focus on the broker. And that's also one of the reasons brokers are more popular now, because most brokers are discovering that since traders are losing money, some of them are running pure a-book instead of them to pass order to the liquidity. So even investment bank also pass order to liquidity. A hedge fund pass order to liquidity. But individual cannot go to liquidity direct. No, they cannot. So the individual will go to a broker first. So when they open a brokerage account, which is like a retail trading account, then the broker will now pass it across to liquidity. This is how it works. So private firms too, some private firms too pass to liquidity. They don't use a broker. Some private firms like family office, some private companies, private financial companies too. So a private firm can also be like a hedge fund or portfolio management company. So they don't offer retail trading, like they don't give you a platform to trade. For example, GFT Ava, they don't give you a platform to trade, but they can have their own direct liquidity straight. So all order it goes directly to their liquidity. So they're not trying to give you spread, because the spread comes in when a company want to offer you retail. So when they get order from liquidity, for example, a broker get order from liquidity, he will not pass the order to you and charge you spread here to make more money from you. But if he doesn't have anybody he's passing the order to, or he's offering the price of execution to, he can trade directly to the liquidity, and they will not charge himself anything, because any price liquidity is giving him is the price that he will be able to execute the order. Now, another way the brokers also cheat is like this. They can charge you excess spread. For example, now, liquidity can be selling oil. The liquidity can be selling oil to the broker, like giving him the price of maybe 65.70, while the broker will be giving you 65.78, like additional 8 pip. So that 78 or that $8 addition is his profit or his commission. So because of that, some can charge you outrageous commission. At the end of the day, you see that this broker is taking more from you before he pass that order to the liquidity. So the same thing, let's say you want to sell, the liquidity can be giving him a sell order, maybe at 65 point, maybe 0.60. Why he be giving you the broker will giving you a sell order at 65 point maybe 50, like much lower price to sell. So now a broker can be making more money from you. But but if it's a private firm or a hedge fund or investment banker who are just trading internally within their own institutional trading firm, they don't have anybody to pass order to or to reset to. They will just trade directly on that current market price coming from liquidity, and they make their money too. Do you understand how these things works? I'm actually giving you guys. I'm actually giving you guys consultation training now, which you didn't pay for.
Well, it's a complex training. It's a complex process, yeah, but it's making sense.
Yeah. It's a complex process. So liquidities work with brokers and everything, but individuals doesn't know what happened. Well, the only thing you guys know is I deposited and I withdraw. Yeah. So okay. Profit and risk in oil. Crude oil contracts are believed to be less risky than equity or stock, because you will need a unit of order of a deposit to place a trade. Yeah, so this could be right, but where we get it wrong is here. Or where we get it complex a bit is when we talk about this unit, is like a unit of stock. But you know that in stock market, let's use crypto for example. If you hold $10,000 worth of crypto, it's in that $10,000 that is trading on that crypto. So you know that.
Yes.
But in trading, you could have $10,000 and choose to trade with only one unit. So you have enough margin and enough leverage available, and also enough free margin available for trading. So it become a bit, that's what makes it a less risky. So you can choose to take only 1% risk of your money in the forex market or with your broker. While on the stock market, if you buy $10,000, it's $10,000 that is currently traded in the market. Why that's not how it is on a broker. Like Emmanuel, if you must have had some losses, if you check very well, either you bought with more units, and that unit is also controlled by leverage, which is selected. If you ask a broker to give you more buying power or trading power, the broker can increase their leverage, giving you access to trade more. And that's one of the reasons why many brokers are leaving UK. EU and some other country, because those countries doesn't allow them to give a trader or investors more buying power, which is more leverage, and it's becoming a problem for them. Because of that, they are looking for country that has that can give them power to give any leverage, because of that high leverage helps them in terms of making it enticing. And when traders come to trade on high leverage, they have chances of trading more, placing more trade or buying more. And when they buy more, they have exposed their account to risk, and they have chances of losing money. Yeah, any question on this slide? Because I'm done. I want to show you practical.
Mr. Uche. So from all the classes I've attended so far, I understand demand and supply as a factor that affect price. Now, the challenge I have is interpreting political information. So, like for instance, now, if you go on oilprice.com, yeah, you will see different news from different countries. So I know each of these news, they have different weights. You know, like if you hear news on Russia and Ukraine now, you will know that it will have impact on oil very well. But when you now start reading issues like Kazakhstan increase output by 100 and something thousand barrel, you know, so country like that, how will you know their weight to know whether it will influence the price of oil, whether up or down?
Now, how I used to know, I used to go to know the major oil producers. Okay. So the major oil producers, yeah. So if I consider them to be the major oil producers, and other information concerning that news, then I can make my decision that, okay, this is gonna cause more demand to drop or not. But if I check them, they're not really the major oil producers. I don't care.
Okay.
Yeah, that's what I do. So I want to answer that your question now, Emmanuel. I don't know whether you're still there. I want to answer your question now, but that's not what I'm looking for. I don't want to use any brokerage platform to show it, because this meeting is recorded. It will be open. It will be uploaded. Because if I use any broker now, I'm promoting that broker indirectly. If more people see it, they'll start opening an account on that broker, and I will not get paid for promoting the broker. That's one reason I use this platform I use to teach. Because there's no need of talking about a broker why I'm not getting paid by promoting them. I know that somebody will observe a lot of things and use it to place a trade. Many people have signed up with brokers because they see that I use that broker to teach. I use that platform to teach. That's something I'm looking for. Okay. I'm not showing you what I'm looking for, sir. Okay, let me share the screen with you. I'm showing you the sign of contract so that you see how the price of contract ends. Okay, someone sent me a message. Okay, I'm here. Okay. Let me share what I'm showing, what I'm searching for. Because I'm on Bloomberg. I wanted to show you how when the contract of crude oil will end. This is WTI crude. These guys, they have changed their system. It's no more the way it used to be. Although I'm on their free one. I'm on their free. This is open price volume this week. It used to show me when the contract will end here. But if you go to your brokerage website, go on contracts, you go on instrument specification. So you go on, if you go there, select WTI, you will see when their contract will end. I used to see it here when I come to Bloomberg, especially when I see this is crude oil, right? Oh, yes, yes, CL. This crude oil is CL. He used to talk about where it's coming from, which is New York Stock Exchange. Let me browse about it again. Crude oil, this one. Is today. Okay, let me go to the crude oil market. Let me go to the market itself. They're asking me to make payment. I'm not paying anything. In this internet, everything is becoming pay. Any small thing, pay. Any small thing, pay. That's why they're blocking this thing. They wanted to make some payments so that you have access to their full this thing.
Information.
Yeah, full information. And if you put a credit card there, you're gone. Every day, money will be going out. You won't even know how to cancel it. Okay, well, so if you go to your broker website, you see when the contract was paid, but that contract is similar to this because Bloomberg is one of the most popular platform exchange are using to trade. This platform costs about $25,000 every month. Bloomberg platform, yeah. Most exchange they use it to trade. They don't use MT5. Yeah. So now I ask, what is OPEC crude oil benchmark this year? This is a question, Emma. So you could see now, they say as of early June this year, the OPEC reference basket, that's a key benchmark comprising a weighted average of crude oil on crude oil Brent from OPEC member countries, is priced at 64.50. The ORB is experiencing downtrend. This present, okay, let me check here. The ORB include a diverse mix of crude oil OPEC members, such as, no, that's not what I want. And that's not your question. Your question, what you should ask is what price did OPEC set for oil price before now? Now, remember that each country has a benchmark. It can also cite Saudi Arabian oil benchmark. Now, perfect. So now, historical OPEC reference basket price, which is the ORB. Here is an overview of the average monthly price. This is as of January was 79.46, 76 point February, and the May was 63.62. Now this June is 64. Now let me say, what is Saudi Arabia? Saudi Arabia, I don't know if I'm getting this incorrect. Arabia, although it will correct me anyway. Saudi Arabia.
No, not correct.
Okay, crude oil benchmark. But it will correct it. Yeah. Okay, Arabian. Where did I make mistake? Okay, I didn't put. Oh, okay, I see. So now, no, I mean the price. It's like this. It's not even what I want. I mean the price. No.
Use the budget.
Yeah.
Budget.
Yes. That's also what I want to type based on their budget. Yeah, see, so now they estimate that the kingdom require an average price of approximately $92 per barrel to balance its 2025 budget. However, the crude oil market price is significantly lower with Brent trading at 64. So now, let me check budget deficit. Saudi Arabia Finance Minister, they have a deficit of 2.3% of GDP for this 2025, amounting to 1.1. And the revenue has also shortfall to average revenue of 18% in the first quarter of this year. And their major oil company, which is their Aramco dividend, Saudi Arabia, the state-owned oil company plan to reduce dividend by 30% this year. So now, I can now use this and I said, what about major, what about other major OPEC members? What is their oil benchmark based on their yearly budget? Yeah. So now, so this is what this country now set up. Physical break even of oil price for major OPEC countries. Now, this is Saudi Arabia, 84 to 90 between $84 to $90. Algeria budgeted their own to be 119. Iran budgeted their own to 123. Iraq 190. Kuwait 78. Libya 63. Oman 65. Qatar 40. UAE 54. This people get sense because they have diversified economic support, lower break even. Now, you could make this on average. We could average this to be 90, I think. Yeah. On average, we could put average 90 or even 90 or around 90 because this is 119. This is 123. This is okay, yes. 90 is fine, or 91 is fine. So now you see that the average price movement, the average price most of the OPEC plus community set up is this price. So now the estimate varies. The International Monetary Fund projected 84.70, while macro and the micro report 90 point that means I was even right when I say average 90. So now look at your answer here, Mr. Ima, that you see the average price of oil, what is estimated to be between 84 to 90. Now remember, they make more money when the price of oil is up. I don't know what make Iran ministers to put their own at 123. I don't know what they were expecting. And Algeria is 119. All these people is kind of easy to understand because some of these bigger companies look at is 63, 64, 65. Now come to the market here. You now check the price of oil. What is the current price of oil? Is it trading below the benchmark, closer to the benchmark, or above the benchmark? Yes or no? Or which one?
Most of them is below the benchmark.
Sorry?
If you're talking about the average, most of them are below.
Yeah. So most of them are below the benchmark. And that's why if you if you do your research about the economic structure of the major OPEC members and also OPEC plus, like OPEC plus, what about OPEC plus, like Russia and other other member states of OPEC. Then you may also see that the market may also be below their benchmark. And that's why we told you that the price is regulated. From there now, you could see that this country will be looking for a way. Okay, Russia, look at their country, Kazakhstan, their own is between 80 to 90. So, okay, that means Oman is also OPEC plus. I didn't know that Oman is OPEC plus. So Mexico, Malaysia is also moderate, 55 to 60, 65. So Mexico is 50 to 60. It means the economy is okay for them, the price is okay for them. So not all OPEC plus members is in a good shape based on the economy. I don't even know what Nigeria stands for. Why do not put Nigeria? Let us ask our own country about our own country.
Yeah, Nigeria is far below the price, based on what China's TV was talking about last week.
Yeah, I'm sure of that. I just want to know what they said their benchmark to be. Their benchmark is 75. So we'll put our own 75. So a daily crude oil, of course, this is what we produce within the OPEC. So, and our currency, the exchange rate was still estimated to be around 1,400. Now our rate is now 1,550. So, so now the market is also below our budget for the year. Do you understand? So we have kind of a revenue shortfall, and we also have a deficit of 13.8 trillion, which is about 3.8% of our GDP. Then we have fiscal break-even price. Analysts expect Nigeria fiscal break-even price to be above 150 per barrel. I mean, for us to break even from all these things. So now, so if you go on proper research analysis and do all this, it may discover that the price of oil will not be favorable to the world economy. Then that's when we can now say, okay, this price is even below their lowest, because the lowest of these things are around 65.50, which is the lowest some of the countries have set up their price. We can draw a conclusion that the price of oil is low. So these countries, now take note of one thing, some of these countries are making more profit when the price of oil is rising. Take note, Chinedu and Abian, those that are new. You see that the budget of the year is below what they're talking about. So if you can also go China, what is China? China is the major consumers. What is their own expectation on oil and what is good for them? Obviously, some of them will be good, maybe rejoicing because of the could get that lower price. Other OPEC community, which is the major politics we're talking about, Felix, we pay attention to what they're talking about concerning the oil. Is this thing good for them or not? That is, they are the major political body that regulate the price of OPEC oil. So if it's not good for them, it means they may be trying to everything possible to push the price high so that they can be able to meet their annual budget, so that the economy will not close out negative. Because if you continue like that, the economy will be at a bad shape. Now, that's why I told you guys that within this area we'll be selling more, we'll be considering a low price, and we may be buying more of oil. And based on the fact that the market is not really good this year, that we don't think that some of these countries will meet up their yearly target. So anytime the market shoot up between this price or anything about 69, we should consider selling of oil. We have spent 1 hour 21 minutes. So, and it's night class. I'm sure some of you maybe wanted to eat. So let me know if you have a question, because this class is big. There are a lot to learn about all these things. Let me know if you have a question on what we're doing now. Then, so concerning the contract of oil, we could relate it to volume, to lot size, and all that lot size. Some of us are already aware of it, which is similar thing we could find here. On exchange, it could be as a unit. Emmanuel, you see that your platform shows you unit. It could be as a unit, but trading is called like volume here, because some of the things you see on exchange is like a replica of what we are seeing here. So, but it's just that they call it a different name. So now it means Mr. Chinedu. So it means this contract you can hold on oil is 0.1. This 0.1 means, let's say it represents a liter of oil, and they give you about 10 cents per movement. Assume we buy oil at this price, we're making like 10 cents on each of the price movement on oil. But what matters to us is why are we buying it or why are we selling it? But on this platform now, this is not a future platform, this is CFD platform. So we are only going to take the profit in cash. So we're not going to take the profit on by asking for the product. So this is a profit now. This is $14,000 profit because we bought oil at 58. Sorry, we bought oil at open price. This is open price. We bought iron at 61, and the current market price is market price is 63. So and the contract we hold is 10 unit, and this 10 units give us $100 per movement. So that's why we're making $14,000 profit here. And there's a swap which was charged. The swap was $554 per this thing. So if we are okay with this profit now, we can hit this volume, this particular this thing, and close it. And the instrument we are buying is, which instrument are we buying? Which instrument? Okay, we bought WTI, and the order came from New York Stock Exchange, LYEMEX. Am I communicating to you, Chinedu?
Yeah.
So you see that it's like a replica of whatever that is happening on exchange. So I don't know whether I will see a contract notification here. Whether these people tell me when the contract will expire. Okay, see that they say next rollover is on the 12th of June 2025. Did you see that? So that's when this contract will expire. So assuming on 12th of June in the midnight, this position will close automatically. But now, and like I told you, some brokers now have introduced auto rollover system, but they will charge me on this position, but they will roll it over instead of closing my position. Because on exchange, the contract will close. That is how oil is done in contract. Why will it close? Because all product open on futures. That is when everybody who opened that contract, who opened that position on exchange, that's when all of them will be closed, so that anybody who's buying or selling will know whether he has made profit or not. And those who are taking delivery will now start preparing to deliver that product. And that's how it works. You need to know the basis of it, whether you're doing it real with them or not. You just have to know it. It will help you to understand some of the things brokers does that you guys may not understand, may cause scam. Why did you close my position and everything? You need to know. Even here, there's something that was called here ESA. This ESA is a new investment service act that many companies in Europe adopted. You see that some brokers have also added it to their own platform, ESA act. You know, if you go and read that ESA act, you see what it's talking about. But some of these, you may not see them on some of the platform that's popular there. You know what I mean? So I do have any question. Those of you that are new, after this time around, you may need to set up an account. Chinedu, I don't know if you need to set up an account. You can set up an account. You need to set up maybe two type of account, manual account and auto trading account. We like our students to be making profit while they are learning, or manually, or you can also be trading by yourself while you are learning, so that you'll be learning all these things. We're not going to go into deep demand and supply meetings and everything, because we have already done that. We're also going to do that tomorrow. We have our own class tomorrow. We can go into demand and supply level tomorrow. But now, I think we have given some basic fundamentals of oil, which is very, very crucial for anyone to understand. And then this one, we gave it on a different definition. It's not the way we have defined it before. Any question?
Yeah, but Mr. Uche, and this one that you were talking about, contracts, and the contract will close. I've not, my first time hearing this.
That's just what I said now, that the way I give it now is not the way I've given before. And you too, I don't think we have given you a proper lecture of, like, introductory lecture of oil since you joined us. I don't think so. Have we? I think we have not, right?
No, but based on what you are teaching now, it looks like you have not given me proper, because the platform I'm using, I initiate my trade and I close it so that I don't use something like that contract.
No, the contract is closed automatically if you refuse to close their position, but there what is called automatic rollover. This is that brokers and exchange can roll over your position automatically. Before, when there's no maybe technological or when there's no improvement like that on technology, they will just close all position. Because once the order is closed on exchange, all the brokers who are connected to that exchange, the whole order will close.
Is it on a daily routine or weekly?
No, it's monthly. The contract is monthly. Once
okay.
Yeah, it's monthly.
So what you are saying now, any contract that stays for a very long time, once it gets to that day, it will automatically close.
Yeah, it will close, and the next day, because you're not the one that closes it, the next day, your broker will open those positions. But if you're trying to close at loss or profit, they will not restore it because they open it on a new price of the new contract.
Okay. That would definitely not affect people like us because we're not keeping trade for 1 month.
It depends because it depends on how you trade. Now tomorrow, look at how it was. You know that we are addicted to this. You may not know that the contract will expire on 20 something. You place it on 15th or on 16th. Before you know what's happening, the trade will enter that day. So sometimes we don't even remember. You can place trade today, only for you to discover that contract is ending tomorrow. You wake up, where is painful is you may see a trade that is losing. So it's losing, no, but you know that it will gain. Only for contract to catch up with that trade. Then the broker will close that trade loss, and now you open it. So that one I've lost, you have lost that one, and that was the painful part of it. Why? Now there's improvement. Money broker does not close contract again. They do auto rollover, and sometimes they will charge you. This cost is big. I can't go on showing you more of contract specification or different exchange because on a future platform is different from this platform I'm showing you guys. If I show you on a future platform, see how it works. You see how the sec charges and everything, how the margin, the profit you have to keep and everything does. Yeah, so it's a totally different cost from Forex, even though it look like Forex platform, but not the same metrics we use in trading all of them. Any question again? Some of you are very quiet because of you're kind of amazed, right?